How to trade the poor man's cover call on MooMoo. The first thing you want to do is to make sure that you have options level 3 enabled. You need options level 3 because the poor man's cover call is a multi-leg strategy. So to check this, you can go to the option level above your account summary and ensure that you have level 3 enabled. If not, you could hit update level, but please note that you will need at least $2,000 in equity in order to enable level 3 trading. In this account, I don't have that, but I can still demo the trade for you. If you don't see the option level button here, you'll have to scroll over to the all and then select option level underneath the trade area. This will get you to the same page. Now to open the trade, you'll want to start with the stock that you want to trade it on. For this demo, I'm going to use Google. You're going to want to scroll down to see the chart, and then we're going to select options right next to it to show the option chain. We're going to want to start by changing our option strategy. The poor man's cover call doesn't show up in here. It's really a combo between the calendar spread and diagonal, so we're going to have to use the custom for this. Okay, so we're going to want to start by selecting our leap option. There's a few rules here. Ideally, you want to be at least 6 months out. I'm going to go a year. That's even better. The more time, the better, just the more cost it will be to open the position. And I like to look for a delta around zero point 0.8 for the strike that I'm going to be purchasing. So I'll scroll over to the delta column here. You can see that zero point 0.8 is right in between the 140 and 145 strikes. So I'm going to opt for the 140 strike here. So I'm going to click that and add it into our order. We want to make sure that we're on the buy here. We don't want it to be sell. We want it to be buy because we're purchasing this as a leap option to sell cover calls against. Once you have that set up, we could scroll down and now we could look at selecting our short call to sell against our leap option. So you can do this at whatever frequency you want. I like to do a week out personally. And we're going to be wanting to look at out of the money calls here. And I personally like to look at deltas around 0.2 for this. So that's right at the 175 strike. So I'll go ahead and select that. And we want to make sure that this is sell, right? So we're purchasing our leap option, now we're selling a cover call against it, and that's the one that will be expiring earlier. Once we have that all sorted, we can then expand and look at our P&L for this trade. Now this graph is a little bit misleading. This is specifically representing the P&L if you were to close the entire position at once. So that would be at the any time between now and the expiration date of the short call. So you can see that as long as the stock is trading between 170 and 237, we will be in the green on this trade. But again, with the poor man's cover call strategy, you're normally not wanting to exit the entire position. You're really just wanting to manage the short calls and letting them expire or rolling them out to continue to collect premium and lower your cost basis of the long call. Once you're happy with that, you can hit trade. You want to double check any of the last details and fine tune your limit price and then hit buy when you're ready.